How does what's happening in the economy have an impact on the real estate market? Now, obviously the world would think that with all of the craziness going around, something would have to give, right? Well, I completely understand your concern, and in fact, it is valid. And some folks, they have a few different scenarios that they're running through that they're worried about. There are those people that have to sell and they don't have a choice because of a job transfer or a loss. And there are some people that just may be wondering if they should hold on and see if the market will continue to go up so that they can get the best return on their investment. And then there are other folks that are wondering if they should sell now while the equity's high and capitalize and get the most money possible. Well, these are all good scenarios, so let's talk about them. But before we do that, please don't forget, hit that button, ring that bell, and make sure that you are subscribed so that you never miss one of our awesome video uploads. Hi everybody, I'm Tara Coyle with Coyle&Verberne Real Estate and eXp Realty. Now, the unemployment rate is one of the contributing factors, and it was lower pre-pandemic, and then it spiked pretty high between April and July, hovering between about 8 and 14%. But it's been coming down month after month since April, which is a positive sign, and obviously we hope that it continues to come down. Now, experts are projecting that it's going to continue to drop, and there have been several recessions in the United States throughout history that we can look at to compare what's going on today. So if you look historically during the times where recessions, where the number of months of unemployment was greater than or equal to 9%, the recession of 2020 is the lowest. And this really puts unemployment in perspective as to where we are right now versus where we were in the past. So the Great Depression had 108 months. The Great Recession had 30 months, and the 1980 oil recession had 19 months. But here in 2020, we only had 4 months where the unemployment rate was greater than or equal to 9%. Also, the number of people going into active forbearance is decreasing, and it continues to go down since May. So this means that more people are paying their mortgages as they're getting their job backs. People are wondering what's going to happen due to the election. Now, I recommend looking at a few factors here, and one is inventory. Back in 2008, the inventory levels were high, putting us in what's called a buyer's market. Home prices were depreciating because there was so much supply. But today's inventory is very, very low, showing us that this continues to be a seller's market. Prices are going up because buyers are paying more to secure homes. Also, right now, the percentage of equity in the home that homeowners have is very strong. And according to John Burns Consulting, they tell us that 42% of the homes owned in the country are owned free and clear, meaning that they have no mortgage. And 90% of homes have at least 10% equity, which indicates that less homes will go into foreclosure due to the equity position that the owners have in the homes. So you can see there's a lot of data points that point to a positive forecast for the housing market for the future. Please feel free to reach out to us at no cost or risk for a hassle-free strategy session. We look forward to hearing from you here at Coyle&Verberne Real Estate. And as always, make it a great home buying and selling day.